Well, welcome back to this Money Control live stream. You're watching Closing Bell, and it's not a pretty picture when it comes to the screens this afternoon. We've seen the currency in free fall for a second day on the trot, and we've come very close to that 90 handle vis-a-vis the dollar. 89.95. That's the new low that the rupee hit today. And of course, stocks have also been feeling the pressure. Currency jitters have been weighing in on stocks as well since morning. In fact, right now, as I look at the screen, the Nifty was holding on to the 26,000 level by the skin of its teeth. Now, of course, we are off those lows, but still, we are below the 26,050 mark. We've taken out the 26,100 mark quite decisively, it seems so. But 25,900, that's the next crucial support zone that the chartists have been pointing out. I think that's a 20 DMA or something. So that is a crucial level to watch. It's a 150 point cut on the Nifty as we speak, a 500 point cut on the Sensex. You've seen mid cap index also down somewhere around 0.2%, but it's kind of outperforming the benchmark indices. Breadth remains poor. It's 1:2. That's the NSE advance decline ratio. You've got 928 advances to 1971 declines. If you look at the rupee right now, it's around that 89.8 handle. So yes, but the record low stands at 89.95. Looking at some of the other indices, Bank Nifty, that's come off quite a bit. It's down 400 points. Of course, there's been some rejigging that's happening on the Nifty Bank Index as well, wherein the weightage on ICICI Bank and HDFC Bank will go down. And a couple of other mid-cap banks will of course be included in the index as well. So some bit of impact of that as well, because Bank Nifty has been under pressure right from the word go since the start of the session. But rupee, that's the main topic that's been the talking point for over the last week or so. This is the second instance where we've seen the rupee clocking in such a sharp fall after yesterday. I mean, there was one more day last week when we saw the rupee take a tumble, and since yesterday as well, the rupee has been hitting new lows. Let's bring on board Kunal Sodhani, Head Treasury, Shinhan Bank India, to figure out really what's the next trajectory to watch out for. Kunal, lovely chatting with you. Thanks a lot for agreeing to join us at a short notice. But yes, rupee has been in a free fall. We are looking at the 90 handle. It's almost here. What is your sense? What could be leading to this sharp fall? Aside of the fact that we've not really had a deal with US yet, we've seen consistent FPI outflows. That's that's some of the factors. Those are some of the factors that are weighing in on the currency. But what is it that's really leading to such a sharp fall? Your thoughts? And since you are so close to 90, what is the kind of level that you're watching out for? Here on.
Thank you so much. So first of all, as you rightly said, that one of the reasons is obviously FPA outflows, but I would not say it's the sole reason, because if we talk about the November month and the December starting month, the outflows are not that great. I would not say that equity outflows are tremendous, which is impacting the rupee. But yes, if we talk about the overall 2025, then the equity outflows have been to the tune of $16.8 billion. But the saving grace has also been the debt flows, where the debt inflows have been to the tune of $8 billion. So net, if I talk about year 2025, we have seen outflows only to the tune of $8 billion. So I don't think, if we are speaking only FPI flows have been a major trigger. Personally, I don't believe so. There are several other factors which are important to consider. First, obviously, there was a level 8880 which was being protected to a large extent by our central bank. And obviously, once that gate was opened, there were several stop losses which got triggered, and we saw a move towards 89.5. The major reason and trigger was two things. One, obviously, the trade deficit numbers which India witnessed, which came in around $41 billion. All the exports dipped almost 12% year on year, and the imports rose by 16 to 17%, precisely 16.6%. So that was one of the trigger points which opened the gates, because obviously you need more dollars to suffice to this deficit. Secondly, there has been a war between growth and inflation, because if we see the GDP numbers, they have been tremendous to the tune of 8.2%. And also at the same time, the inflation trajectory has been lower, 0.25% is the CPI. And 5th December, we have the RBI monetary policy. And now there is a 50-50 decision where there can be a rate cut, there should not be a rate cut. the topic is very important to watch closely from the rupee perspective also, because in case if we see a rate cut, it further exerts
Hmm.
more capital outflows from the economy, and in turn more rupee weakness will be welcomed. So these are two factors. And third, lastly, was
Hmm.
one JPY, which is the dollar JPY, Japanese yen, whether 10-year yields have been going as 1.82%, where the 1 year, if you talk about previous 1 year, it was at around
Hmm.
1.13%. Now, what happens because of this, in simple language, for everyone to understand, that initially Japan used to have negative interest rates. You used to borrow at near 0% and invest in US or other economies at a higher rate on a fully hedged basis. Now the yields itself are around
Hmm.
1.5% to 2%. And plus, on a fully hedged basis, if you go, you get a very little carry, which is like 0.75%. And that too, when your currency also starts
Hmm.
depreciating, like in case of Japanese yen, then puts further more pressure. So these three were the major triggers, and I think RBI have clearly understood and left the gate open on purpose, where they want to define
Hmm.
demand and supply kind of scenario for dollar rupee pair. Going ahead, your question, I believe yes, 90 is a psychological barrier. We also thought the same for 89, but it was a matter of few minutes where 18 and a half came.
Hmm.
So I would not be surprised that a depreciation towards 90 half, 91 levels can definitely be seen. Now the base has gone to
Hmm.
88.80. If you talk about the entire 2025, we have smartly moved by 1.5 rupee,
Hmm.
creating a new higher range. So we started with 85 half to 86 half 7. Then the range was 86 half to
Hmm.
87.80. Then there was a lot of protection at 87.95 by the central bank. And then there was a sharp move back to 86. Then a new range was formed between 87.80 and 88.80. So finally, now I think the new trajectory in the new range expected is 88.80 to 90 half, being a broader range for the December month. That's what our purview
Okay.
is.
Okay. Okay, 90 and a half, and that 88, 80 on the lower side. But talking about how the year has been so far, rupee of course has been
Mhm.
the worst performing Asian currency in 2025. Do you expect that to continue in the new year in 2026, or do you think once we get some color on the trade deal with US, much of that fall would get arrested? Is that the view you hold?
So, rupee, if you talk about the last 25 years, rupee has been a depreciating currency. The average CAGR depreciation in rupee has been to the tune
Hmm.
of 4.5%. Of lately, yes, the depreciation remains at 3.5 to 4% because of the interest rate differential being narrowed. But further, when we see Fed rate cuts coming in, and even RBI, in case if they're looking forward for a cut maybe in December or March, this interest rate differential may remain nearly to the same level. So I believe the depreciation may not be sharp. RBI definitely is vigilant, not on the level, but on the excessive volatility. You're right that the trade deal is an important
Hmm.
element which every market, it's not about only currency, but even equities or commodities has been eyeing. Where December end is what where people are expecting some kind of outcome, or maybe a positive outcome coming from the trade
Hmm.
side. But in case if it doesn't come, then I think this depreciation, slow and steady depreciation may continue towards 91. In case if we only see some positive elements
Hmm.
and the trade actually getting cut, then I would not be, it not be surprised to see a very sharp rupee appreciation back to around 88 levels also.
Okay, okay, got it. One more question, last one. A paucity of time really. Here on, do you expect RBI to get more aggressive in the NDF or in the spot to curb the volatility? I mean, is there a sense that the central bank could do that?
So if we talk about last 2 to 3 trading sessions, honestly, we had this NDF expiry also, and we couldn't see much of an intervention there.
Hmm.
I think that was in fact more of a oil to the fire, and dollar rupee further rallying towards that 90 mark now. So intervention will be there. Definitely, RBI is keeping a close watch towards the levels. But somewhere RBI understands the macro perspective, and we may be too myopic in fact to judge the elements which they may be observing, from a global perspective as well as from the domestic headwinds. So intervention possibly may happen. I think as we discussed that every time they find a new range and within the new range they intervene. So possibly the new range now is 88, 80 to
Hmm.
90.20, 90.50. So I think the higher side interventions can possibly come in, but RBI is also clear not to be dependent. It's like a lion story where the lion will come and eat you up. I think it's,
Sure.
the importers and exporters have to be very vigilant. They need to follow their proper risk management policies in place rather than trying to be dependent on the central bank or trying to eye a top or a bottom. Lastly, FX reserves data also states that they did intervene because we did see a dip of around $4 billion week on week. We are currently around $688 billion, but it's a very
Okay.
healthy reserve, and RBI definitely has a lot of ammunition in case if required to intervene.
All right, got your point. We'll have to let you go on that note,
Sure,
Kunal. Would like to thank you and look forward to interacting again with you sometime in future.
sure, my pleasure.
Thank you. Thanks a lot. Well, on that note, that's the trajectory 90 and a half to the dollar. That's on the higher side, and 88.8 on the lower side. That's a broad range that Kunal really is expecting on rupee. But let's take a look at the market. 2635. That's where the Nifty is at. Breadth remains poor, but in terms of sectors, I just want to point out that most of the sectors are trading in the red. In fact, barring the PSU Bank Index, all the other sectors are trading in the red. In fact, PSU banks have also fallen now. It's the pharma pack that's the sole sectoral gainer at the current juncture, and that's being led by Gland Pharma. That stock is up 2%. Glenmark up 2%. Wokhard extending its gains from yesterday, up another 2%. You've got Biocon, Dr. Reddy's. These are some of the movers on the positive side that's keeping the pharma index afloat. Nifty Fin Services, that's the top laggard in terms of sectors. Banks, of course, under pressure. Some bit of technical adjustments will happen. I think ICICI Bank and HDFC Bank will see their weights getting reduced on the Nifty Bank Index. That's another reason why we are seeing some bit of pressure on the Nifty Bank Index. But there are a couple of other banks like Yes Bank that are holding out, given the fact that they will find a place on the Nifty Bank Index as well. Metal Index down 0.3%. Real estate, continues to languish. That index is down 0.2% or thereabouts, and FMCG as well is down. But I want to just point out the fact that Asian Paints has surged to the day's high. There is a bullish call from UBS. In fact, they have upgraded the stock as well, which is why Asian Paints is the top gainer in a weak market. That stock is gaining somewhere around 3% or thereabouts. We'll take stock of that with our chartist later on. But let's understand the way forward for the markets on a fundamental level. Joining me right now is Puneet Sharma, CEO and Fund Manager at Whitespace Alpha. Puneet, lovely chatting with you this afternoon. We did hit record highs, on the benchmark indices just yesterday. Since then, the mood has been really been spoiled by what's happening in the currency market. We are really feeling the jitters. But even then, even if you keep the rupee factor aside, the mood hasn't been all that great. There is a lack of conviction, given the fact that we've seen broader markets not really participating. We've seen investors seeing 30 to 40% cut on their portfolios. We're seeing some stocks that have erased quite a lot from their all-time highs. So lack of conviction there in the market. But with rupee jitters coming in, what is the trajectory looking like here on?
I think you're absolutely right. There are a bunch of jitters in the market where people are not really certain about where the market is headed, where are individual stocks or sectors and their outlook, especially given that there is not enough clarity about the India and US trade deal, which is expected to happen anytime soon. Now, till the time that we don't have an RBC, the RBI MPC and the announcements thereafter, and the announcement of the trade deal between India and US, I think there will be an ambiguity. There will be jitters in the market as well, and you will see these kind of movements in the market where the market is approaching its all-time high peak and then retracting from there. In my opinion, I think it will also find support at certain levels because it is still providing enough opportunities for individuals to come in and purchase stocks, especially where I think a lot of the fund managers slash individual investors have a lot of conviction. But clubbed with the depreciation of the rupee that it has just seen the clobbering that it had over the past couple of days, I think it's going to change a lot of the landscape. But as soon as the information about the trade deal comes in, or the information about the announcement from the RBI chairman is going to be there, I think you will see that the market is going to find its feet again. And then especially if the rate cuts and the announcements on the trade deal are in favor, I would expect that the market will again start gradually creeping up towards its 26,370 kind of a number again. That's in the short term what I would expect out of the
Sure,
market.
but when sure, sure. 26,300 and levels in excess of that in the short term. But when you talk about the rate announcement being in favor, don't you think that the recent GDP data would have put a rate cut on the back burner? Street is extremely divided. One side believes
Right.
that a rate cut is the need of the hour if you want to revive or unleash animal spirits. But on the other hand, one would argue that growth is strong. There's really no need for a rate cut right now. Perhaps wait for a rainy day to oblige the market with a rate cut. Which camp are you in? Do you expect the RBI to actually go ahead with a rate cut now, with rupee weakness also coming into the equation? How would that really pan out? What are your thoughts on that front?
Sure. So that's, I think, the golden question right now. And in my opinion, I don't think a rate cut is going to happen right now, especially given the kind of beating that the rupee has taken right now, because obviously that it has a direct impact upon the USD INR exchange rate. But yes, the GDP numbers are extremely healthy, sitting at a 8.4 kind of a number for the quarter ending October. And inflation is also fairly under control, with the CPI landing at about 0.25%. That's insanely low. And I think that will give you a lot of confidence if the RBI wants to go for an aggressive rate cut. But given that the INR exchange rate has kind of gone completely in the other direction that they would want it to right now before the RBI MPC meeting, I think that's just an indicator that they may want to step back, evaluate it a little further. And the growth rate, again, it gives them a lot of headroom to hold on the interest rate as well. And in terms of the CPI inflation, those figures, they do warrant a rate cut, but I think there is no other reason in the economy as such, which is kind of pushing them to do the rate cuts as of now. So yeah, I won't be surprised if there is no rate cut. I'd just be pretty happy for the investors if there is a rate cut coming in, because that will definitely boost the economy a little more, and maybe we can expect a decent number coming in out of the December, October, the quarter as well.
Got your point. Coming to some ideas then, wealth creation ideas, where do you think the alpha will come in from in 2026? Top three alpha generation themes, I beg your pardon, from your end for the benefit of our viewers?
Sure. As a fund, our philosophy is that you buy any stock or any particular industry that you are convinced with, where you have conviction, and hold them for the long term. But over the next year, I think still one of my favorite go-to stock or the category of stocks will be FMCG as well as consumer durables. With GST rates coming in, with obviously the income tax regulations also changing in favor of consumers. So that's one sector, or actually two sectors, that I would really think that can deliver very good returns and very good revenue growth numbers as well. So those would be my lookout points essentially.
Sure, sure. Last question really. We've seen a spate of IPOs. We've seen the primary market being very busy since September. Some names like Lenskart, hitting the market. A lot of debate around valuations. Do you think it's time for a reality check in terms of valuations, the kind of price they are commanding, even though they're either loss making or they've just turned profitable? So at least for the retail investors, does it really make sense for them to wait it out before getting in, or should they put their money in right now and wait for the next 3 to 4 years for real earnings to flow through? What is your outlook on this entire space right now?
In my opinion, I think it's the IPO market has been a mixed bag. The primary listings Some of them have done fantastically well. So picking and choosing one just because one of the recent IPOs hasn't really done too well, or some of them have done fantastically well and you missed out and then you want to jump into this, will probably be the wrong approach. So each individual security will need to be evaluated for its own merits. Again, it is a slightly more complicated, slightly more trickier evaluation because you don't have a benchmark valuation in place. So you're going by whatever the merchant banker has kind of figured out is the fair value of a company. But you need to do your own internal evaluation whether you
Hmm.
believe that a company like Lenskart will do phenomenally when maybe given a couple of years in the listed market and reporting financials on a quarter-on-quarter basis now. But we have seen some fantastic IPOs
Hmm.
happen in the recent years as well. I mean, going slightly beyond the recent quarters, but something like an Eternal Zomato at that point of time obviously has done pretty well for its investors. So those are the kind
Hmm.
of ventures that I would say that it is still worth going in for IPO allocation, especially for retail investors, because I think those are the ones where you can actually make multiple X returns if the IPO has done fairly well recent or in times right after listing.
Hmm. Okay, interesting. But what about some emerging themes then? Would green energy, solar power, EVs, would those also feature in the list of value generating themes, alpha generating themes, so to say, going forward for the next 2 to 3 years, or even longer term for that matter?
Fair question, but my take on this is that these are all industries which are very heavily dependent upon whatever is the global landscape of the economy. So a trade deal between India, US, and a trade deal between US and China as well for whatever other rare earth metals and everything related to them. If those materialize and those are beneficial for the industries, you will see multiple increase in the valuation of these companies, especially something like a lithium battery manufacturing company or even a company which is involved in the entire operation chain after the sales have already taken place for the electric vehicles. So there is potential to make multiple returns, but that is fairly dependent upon the global economic and political landscape, which is very hard to predict at the moment. So at the moment, I would want to stay away from them. As soon as there is some bit of clarity about what's happening on the political front, I think that will be the time to jump into these kind of sectors for sure.
All right, wait for more clarity. That's the call. But with that, Kunal, would like to thank you for taking out time and joining in and sharing your thoughts. Always a pleasure. Look forward to our next interaction as well. Have a great evening.
Thank you so much.
Thanks a lot. Well, with that, let's shift focus to what's happening with the market. We just about 4 minutes to go for the markets to shut. We are back above that 26,053 mark, 50 mark, so to say, trading at 26,053 right now. Some of those losses have been paired, not much though, but it's still a 120 point cut on the index. But yes, 2650, good to see the index recovering above that level. 400 point cut on the Nifty Bank Index down 370 points, 59,300, that's where it's at. Advanced line ratio 1:2. Sector wise, as I had pointed out, most of the sectors are trading in the red. I think pharma was the only one that was managing to hold out, but let's see how things are panning out. So IT has also edged back into the green, and so has the auto pack. So pharma, IT and autos, slim gains, but still some green on the screen finally, and it's not all red, at least when you look at the sectoral picture. But on that note, let's get on board. Our chartist for the afternoon joining us is Osho Krishan of Angel One. Osho, lovely chatting with you. I just want to ask you, I just want to begin by asking you the kind of weakness that we have seen in the market in the last couple of days, ever since we hit record highs. What's your sense? Is just a cool off that's happening, or do you think some kind of reversal is taking place? How would you approach the index right now?
Very good afternoon. Firstly, thank you for inviting me on the show. Well, yes, no doubt in last two trading session, we have seen a kind of a correction from the lifetime highs of 26,325 zone. And on the technical front, the formation of open high candlestick formation in last trading session is quite significant, and it has implemented a challenging scenario for the bulls. But overall, the sentiment remains on the positive front, and I'm expecting that 26,000 being a psychological mark should provide some kind of cushion, while 25,850 is a very strong support levels on the positional front. So overall, I'm expecting that 25,850 is a very strong support zone from where we can see some kind of a strong buying traction coming back in the market. While on the higher end, 26,325 is a very strong hurdle, and any breakout above 325 can only provide a strong rally and fresh leg of rally in the coming period. So overall, now buy on dips and sell on rise kind of a market scenario is there. So utilize dips around the zone of 26,000 on immediate basis, followed by 25,850 on positional point of view with long positions, and on the higher end, 26,250 to 350 remains a kind of a resistance zone for Nifty.
26,350 resistance zone for the Nifty, and 25,850, that's the next, in fact that's a very important support for the Nifty. But to talk about the Nifty Bank Index, it's come off quite significantly after clocking in 60,000. Of course, some technical adjustments will also take place on the index, right? We'll have two new additions. We'll have decrease in weightage of ICICI Bank and HDFC Bank as well. So in the middle of all this, do you see some bit of muted action or weakness persist on Nifty Bank Index? And your thoughts on those two counters, ICICI Bank and HDFC Bank?
See, firstly, for bank index, it has seen a very strong stellar rally and has been into a very strong primary up move. So there is a possibility of some kind of profit booking in the near period. On the technical front, I'm expecting the zone of 58,800 to 59,000 provide very strong cushioning to the counter, because the formation of candlestick on the daily time frame chart suggests 58,800 to provide very strong support zone. So I'm expecting that from here onwards, another 500 point of downside can be seen in Bank Nifty, and consider to be healthy from a long term or from a very short term perspective as well. So the buy on dip approach applies for banking space also. 58,800 will be the levels where one should try to look for buying opportunity in banking space. On the higher end, again 59,600 to 60,000 will be the resistance levels for a very short term point of view. Now coming to individual banks, ICICI Bank recently has gained some kind of traction, but again has started cooling off from the cluster of moving average. So I expect that on the shorter term duration, the zone of nearly 1350 to 1360 should be seen as a buying opportunity, while on the higher end, 1380 to 1400 still prevails a very strong resistance level. So approach should be the same, buy near the support levels of 1350 and try to lighten the position around 1390 to 1400 kind of a zone. A breakout above 1400 can only provide a strong momentum in this count.
Okay, that's about banks, but let's take stock of the market close first before talking about more stocks. Nifty has shut shop above that 26,050 mark of the day's low, and Sensex down 500, 85,138 is where it shut shop. Mid cap index fared better than the larger peers today, down 0.2%. Bank Nifty down 400, below that 59,300 level as well. Breadth of the market was weak, as has been the case. 1:2, in fact 2:5, if you may say so, for the market breadth. 888 advances to 2,032 declines on the NSE. In terms of sectors, as I mentioned, we've seen some bit of green. Some sectors managed to do well in a weakish market. Pharma, IT and autos, some semblance of green there. Otherwise, banks, financial services, metals, even PSU Banks that was doing well for the first half of the session succumbed to some bit of selling pressure. Realty continues to be under pressure, and the same goes for FMCG. Let's take stock of some of the movers then. On the lower side, Interglobe Aviation, that stock has been under pressure. Today as well is down 2%. Axis closed second, that stock was down 1.5%. Reliance Industries as well saw some profit taking today, some bit of selling pressure there. 1.5% down on Reliance Industries, so that's also weighed on the index. HDFC Bank, ICICI Bank, as we just spoke about it. L&T, Bharat Electronics, Shriram Finance, ITC, Power Grid are among the other laggards. But what's doing well? Asian Paints, there has been an upgrade by UBS. Just the report came out just a few minutes ago, I guess, half an hour ago or so. We've seen a sharp reaction. Asian Paints top Nifty gainer up 3%. Dr. Reddy's, some of the pharma names doing well. That's what kept the pharma index afloat. Dr. Reddy's up over 1%. Some of these auto names are also doing well. I can spot Maruti, Bharti Airtel also doing well. Tech Mahindra from the IT pack, Trent as well doing well. Jeffries came out with a report on Trent today. Some bit of green on Trent. Grasim, TCS, Geo Financial, these are among the other gainers. But one stock that was under pressure, reeling under pressure, so to say, was Bajaj Housing. I think at 52-week lows, there was a block deal, and Bajaj Finance promoters may have sold somewhere around 2% stake at a discount. The stock is down 50% from its post-listing high, and of course, I think it's at a fresh 52-week low as well. How would you navigate a Bajaj Housing today? Of course, there was selling pressure because of excess supply, but here on, do you expect the weakness to continue? And is there some more time to go before the stock finds its bottom?
Technically, this counter was already in a very strong bearish view, and with the kind of a breakdown that we have seen in today's trading session, the counter is now at its lifetime low level. So technically, there is no sign of positive sentiments or positive developments that one might look for starting accumulation in the counter. So it is advisable to stay away from the counter for the time being until it again kind of regains some kind of a strength above the zone of 110. So till that time, better to stay sidelines. Technically, it is looking very weak, and I'm expecting that in the coming period, it might even plunge towards the zone of 90 to 85 kind of a zone.
Okay, that's the view, 90 to 85. Those are the kind of levels to watch out for on a Bajaj Housing on the downside. But what do you make of the moves on Asian Paints? The stock, I think, has regained its lost mojo. Fundamentally also there are reasons, competition concerns easing, and of course most of the brokerages turning bullish. The stock has been seeing good buying interest as well. In the last 1 month, it has rallied somewhere around 18% or so. What's the trajectory looking like? Is it, getting more bright here on for Asian Paints?
Overall, there has been very strong momentum in the counter from the zone of nearly 2600, where it has given a breakout. Till now, 2950, 2960 is the zone. It is looking very positive, and on the technical front, with the kind of formation or the consolidation breakout the counter has given, the next potential target comes around the zone of 3200. So that will be the next level to watch out for. I am expecting that although the counter is already overheated, the technical parameters are already on the higher stream, but the counter looks very positive as of now. There has been consolidation. That means time-wise correction phase was already there in the counter. And again, the counter have started gaining traction. So one should stay invested in the counter. 3200 will be the short-term target. And on the lower end, if in case of any kind of profit booking or any kind of cool off, which might drag it towards the zone of 2850 to 2900, that will be seen as buying opportunity only.
Okay, that's about Asian Paints. But let's take stock of some of the other movers. I think movers in terms of volumes as well. You had the likes of M&M Forgings. That stock was a big gainer today. Saw its biggest volume jump as well since 2024 of May 2024, so to say. Stock also managed to break above its 200-day moving average of 340 rupees or thereabouts. But in 2025, the stock is down over 20%. How would you look at this stock, and what do you make of today's volume action?
For MM Forging, I expect the counter have already seen a kind of a strong corrective phase has been there in the counter, but today being the first day of kind of a reversal, the counter has retest the zone of 200-day exponential moving average. So I will be waiting for one another day to have a follow-up buying. If it happens, if the counter crosses above the zone of 350, Then from there onwards, the outlook might turn towards positive. But today, one should maintain a cautious stance and keep this counter on the radar. 350-55 will be the immediate resistance levels, and the breakout can provide some kind of positive momentum and counter trend to start in the counter.
Okay, that's about M&M Forgings. But HCC, saw its biggest single day gain since March. The rights issue that's happening, it's at 50% discount to CMP. The stock, of course, has been below its key moving averages. It's been beaten down 32% so far in 2025. I think the last 1 year it has shaved off as much as 40%. It is in fact set for its first negative year after 2020. What do you make of today's move? Is this some kind of a reversal after the kind of pressure it has seen this year, or would you say that from now onwards we could see some more rebound going forward?
Technically, the counter have seen a kind of a reversal because on the technical front, the parameters were already into oversold terrain, and also the price was near about the historical support of 22, 23 kind of a zone. So with the kind of momentum and the volume based buying that we have seen in today's trading session, this is the first signal of reversal, bullish reversal in the counter. So I'm expecting that from here onwards, the counter can retest the zone of 29 on a very immediate basis, followed by the bearish gap on the higher end, which is placed around the zone of 33 to 34. So from here onwards, the counter seems positive, and one can look for buying opportunity for the target of nearly 33, while on the lower end, 22 is a very strong support levels, and that should be kept as a stop loss for the counter.
Okay, keep 22 as a stop loss on HCC. Last couple of stocks really. Mastech, it's a CNBC TV 18 exclusive. Sources say that Mastech promoters are exploring a sale of 20% stake, and the promoters are seeking a premium of up to 25% over the current market price. Succession and leadership stability, these are some of the reasons that are being seen as driving the stake sale. We saw Mastech flatten out really after a spurt, and the last month or so as well, the stock has really been sideways, so to say. Any thoughts on what the chart structure is looking like?
Technically, it is still into a bearish format. It is having a kind of a lower high formation on the daily time frame chart and has been placed below the short term and the long term moving averages. So till now, it is not very much strong, or there has been no key developments or positive developments in the counter. So better to stay sidelines from the counter. Once it break through above the zone of 2400, then only we can see some kind of continued momentum. Till that time, better to stay sideways and look for other counters from the same industry.
Okay, look for better counters in comparison with Mastech. But before I let you go, Osho, any recommendations for our viewers for the next 1 to 2 weeks, or a longer time frame?
See, first counter which is looking very positive to me from a short to medium term point of view is TMPV, Tata Motors Passenger Vehicle. The key development on the technical front, that the technical parameters is now overturning from the oversold terrain. So that is the first positive signal for the accumulation purpose in TMPV. Also, the price has seen a historical support of nearly 355 to 350 zone. So from here onwards, the risk reward is very much favorable. One might look for accumulating at current levels, keeping a stop loss of 350, and on a very short term or kind of a positional view, 380 to 384 will be the first target that I am expecting, followed by 410, which is a very strong hurdle for the counter. So at current levels, one might look for accumulating TMPV. The other counter, which is again showcasing a reversal signal, is UBL. UBL, after a very long period, the counter have surged 3%. That has been backed by volume, and the trend has been turned around in the counter. So I'm expecting that in the short term perspective, one might look for buying opportunity in the counter. 1780 to 1800 will be the immediate target, while on the lower end, 1660 is the stop loss that will be advisable for the counter.
Tata Motors Passenger Vehicles and United Breweries, these are the recommendations coming in from Osho. Osho, with that, thanks a lot for taking out time and joining in. Appreciate your taking out time. Look forward to our next interaction as well.
Sure. Thank you for inviting.
Thanks a lot. Well, that's the thing, that's the story rather for the day. We've managed to close above that 26,050 level, but it's a third straight day of losses, and clearly looks like conviction is missing at highs. Yesterday we clocked in record highs on 4 frontline indices, and since then we've come off quite a bit on the Nifty Bank Index at least, firmly below that 60,000 mark, for the Nifty Bank Index. 59,300, I think we've taken out that level as well. And even for the Nifty, we've come off, we are just about at the 26,050 mark. But on that note, let me bring on board my colleague, Yatin Mota. Yatin, currency jitters clearly weighing in on stocks since yesterday. And not the first time that we saw a steep fall in currency. Last week as well, there was a day when we saw a steep fall yesterday. And today, of course, came very, very close to that 90 handle.
Almost like 90.
Almost there,
just shy 5 paise, but technically it's almost 90. Most importantly, today was expiry on the National Stock Exchange on a weekly basis. That pressure continued. FI sell figures is something that we'll be watching out for. And no new triggers, news flow. It was quite a dry day when it comes to news flows. Not much happening.
I think people are only reacting to the rupee fall and how it came close to 90.
And obviously the expiry led sell-off which happened in the market.
That's true, Yatin. But sectorally as well, you see some bit of technical adjustments that will happen on the Nifty Bank Index. I think that kept shares of ICICI Bank and HDFC Bank under pressure. But Reliance Industries was another one that was among the top laggards. But Yatin, any other from the broader end of the markets, any stocks that really caught your attention?
Yeah, so Sun Pharma Advance, that is one stock. We'll talk about that in detail. Post that court case coming in the company's favor, that stock moved 20%. Balkrishna Industries, Birla Soft, Schneider, Minda Corp, all of these stocks moving 5 to 10%. Bajaj Housing Finance saw a block deal, post which the stock fell 7%. However, the deal happened at close to 95 rupees, post which the stock saw some bounce back. Bajaj Finance is said to have sold their 2% holding out of the 88 that they hold currently. We had the Bank of Maharashtra OFS got subscribed by nearly 3 times. I think the clearing price will come in a bit, but that stock was under pressure, 2% down for that one.
Okay, those were all the movers and shakers from the broader end of the markets. But Yatin, let's talk about some of the stocks that are on our radar this afternoon. I want to start with Asian Paints. The stock really surged in the dying hours. I think half an hour ago or something, we got a report from UBS, and I just got a hold of it. They have upgraded the stock to neutral from their earlier call of sell, and their target price has also been raised quite substantially by 1100 rupees, right? 3,200, that's the target that has been set out by UBS on an Asian Paints versus 2,100. So 3,000.
Nandita, not only Asian Paints, but all the paint
stocks,
sectors stocks were moving. Rub-off was there, and obviously Asian Paints surging 3%. Obviously, you have many more reasons for Asian Paints why it is a buy, but the entire sector was quite active.
That's true, Yatin. Just want to take our viewers through some of the pointers that UBS has mentioned. They've said that the second quarter volume growth was quite robust. I think decorative paint segments saw double-digit growth, because of which, of course, the street also turned bullish. And even for the second half of the current fiscal, UBS is pointing out that the volume outlook looks fairly bright. It has said that the peak of the disruption cycle appears to be over, and the sharp share price ramp up is factoring in significant earnings growth estimate. Of course, we saw estimates being raised after the second quarter performance. Competitive intensity may not have completely waned. That's one warning that UBS has given. It has said that Birla Opus's planned capacity is operational and is yet to announce its strategies. So yes, we have to wait for more strategies to come by from the Birla camp. That could, of course, be one factor to watch out for. A couple of scenarios that UBS has outlined. In the first scenario, it says that if competition continues with structural growth moderating and margins not getting impaired, the structural long-term earnings growth of 12% is something that UBS sees in that scenario. And of course, supporting new target price for that would be 3,200. I think that would be the base case. Scenario 2 would be expect downside valuation of 2,400 rupees if growth moderates and margin pressure continues. So that's the bearish case. In the third case, that's the bull case, they have pointed out an upside valuation of 4,000 rupees. And of course, they are seeing upside valuation based on easing competition, improved growth and improved margin as well. So, three cases, base case, bear case and bull case. So, base case is 3,200, that's the target. For bear case, it's 2,400, and for the third bullish case, it's 4,000. The bearish case is even better than what they have right now of 2,100. 2,400 is the bearish case target price. So yes, things looking bright for now, but let's wait for some kind of more update coming in from Birla Opus. Perhaps then we'll see what happens.
Absolutely, and you know, the new CEO announcement for Birla Opus is still pending because you know the outgoing CEO joined Britannia, and the markets will be watching out for those developments as well. But you know, talking about Sun Pharma Advance, that is one stock which hit a 20% upward circuit after the US court ordered in their favor. This is regarding a fast track US FDA approval which they'll get for a drug filing. This is you know, neonatal children drug which is used for you know, calming down seizures, you know, and this is one of the specialty drugs portfolio in which Sun Pharma Advance could get you know, a probable priority review voucher, which means that once the approval is there, Sun Pharma Advance Research, which is Spark, will be eligible to get milestone payments because Sun Pharma will market the drug for its subsidiary or you know, the sister concern Spark, and hence both of the stocks were active in trade, especially Spark, which is probably looking to get this neonatal seizure drug which is used for infants.
All right, yesterday it was Wokhard and today it's Sun Pharma Advanced Research. I think lots happening in the pharma space. But one sector that's really been on the back foot and that's been quite wobbly is the real estate pack. Yatin, if you look at the year-to-date returns, the real estate index is down 15%. And even since the last high, I think real estate is one of the big laggards on the sectoral front. In the Nifty's journey to the record high from September to now. But you know, let's take a look at some of the reports that have come in on the real estate space where brokerages are still finding value. Emkay Global, in fact, has begun coverage on real estate space today. They've said that they've taken a fairly broad, you know, positive view on the sector. They've said that the market share of listed developers have only doubled to 15% between FY11 and FY25. And of course, it also remains you know, constructive on the continuity of housing demand going forward. But it does prefer you know, small and mid caps within the space which have the potential to deliver 25 to 35 pre-sales compounded annual growth rate over FY25 to FY28 thanks to favorable base and continued market share gains going forward. Its coverage universe, it points out, has shown healthy cash generation with net operating cash flow at 30 to 60% of collections. In fact, it has also pointed out that business development has been fairly strong and industry's net debt levels have also come down quite a lot. 65% it has fallen since FY17, and this of course shows that you know, developers are well positioned for the next leg of growth, and of course they are better equipped to deal with future shocks as well. Let's take you through some of the stocks that it is bullish on. From the large cap space, it likes Lodha Developers. Here they have a target price of 1,500 rupees, which implies a 33% upside from current levels. For Suntech Realty, they have a buy call from the, I think, mid cap universe, 45% upside. That's what they are seeing here. And for Urban Smart Spaces as well, they expect a 40% upside from current levels. And for DLF, they have an ad rating, and here they see a 14% upside. For Oberoi Realty, however, they have a reduced recommendation and they are only seeing somewhere around 2% upside from current levels. So, you know, constructive on real estate, but you know, I don't know, maybe one can look for value in this space because this is one beaten down sector which has completely been out of this leg of the up move for the market.
Yes, and I think you know, the Mumbai real estate stocks have corrected even deeper probably versus you know, North India real estate stocks probably like DLF. Yes, there is correction in the sector. Probably people think that post-COVID, the kind of sales run-up most of these companies saw, you know, was one of the top. But I think a lot of niche launches are happening in Mumbai, in MMR, Oberoi, Prestige. You know, all of these companies are participating in this MMR region. By the way, Adani also, you know, their private business, Adani Realty, has overnight become one of the biggest Mumbai developers with Dharavi project and you know, one of the biggest Goregaon projects coming in their kitty.
That's true. So yes, constructive on the sector, and perhaps one could hunt for value in some of these stocks that MK has really pointed out. But I think with that we are out of time. Of course, for the real estate sector as well, we'll have an important Q coming in later this week. That's the RBI policy decision, and it'll be interesting to see this time what the governor really does. Lots of moving parts, growth, elevated inflation record low, and of course the rupee factor as well. So he has a lot of balancing to do. The RBI governor, of course, we'll watch out for that. But we have 3 more days to go for that. Tomorrow is a new day, and let's hope that we could reverse some of the weakness that we have seen in the last 3 sessions, because global markets are doing fairly well today. Let's see what really happens tomorrow. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. It's a goodbye from me and Yatin. Have a great evening.